Why I wanted to have this live session is I've seen a lot of success stories of traders in Discord, but I've also noticed patterns that are holding people back from even more success or from breaking through and becoming profitable traders. My goal for this live session is pretty simple. My plan is to help you guys lock in that one missing piece in your mindset or strategy that has been holding you back from being successful. So with that being said, I think the best minds tend to keep things simple. I'm not planning to overcomplicate things this session. Everything that will be discussed is going to be concise and pretty straightforward. Now, I also, the account is going to be in the share success. Let's see. Share success. I won't look at the chat too much anymore. It's going to kind of mess up the flow, but now before I start, I also want to emphasize that this is for educational purposes only. And of course, I am not a financial advisor. I'm going to be streaming this doc that briefly goes over what I'm talking about for anyone who likes reading or wants to take notes. But I really just want you guys to focus on listening and really take in the concepts and strategies that I'll be going over this session. So the first thing I'll be touching is portfolio management and sizing, trade frequency, daily risk limits, position sizing, and risk per trade. We're going to hit all these one by one and really go into them in detail. So I'm going to start off here by going over a 10K account, right? We're going to be using a 10K account, for this example, to kind of show you guys in real time how I would manage a 10K account using these principles. So first of all, I would limit myself to 4 to 5 trades a day max. This prevents over trading, but if I get two pretty big losses, I usually stop myself for the day and come back the next day fresh. Oh wait, sorry. I don't know if I said this already, but I'm gonna be streaming this doc, as you guys can see, that briefly goes over what I'm talking about for anyone who likes reading or wants to take notes. But I really want you guys to just focus on listening and really take in the concepts and strategies that I'll be going over in the session. So I really just want you guys to really listen and really take it in and maybe take notes if you need to. This doc is just like something to look at for people who want to take notes or read. But I really just want you guys to really listen and try to take in these concepts. So back to this 10K report, right? We're going to use a 10K portfolio as an example. So I will start off by saying I will limit myself to 4 to 5 trades a day max on this account. this prevents over trading, but if I get two pretty big losses, I usually stop myself for the day. I need some water here. So yeah, if I get two pretty big losses, I usually stop myself for the day and come back the next day fresh. How I would go about sizing is I would size about 750 to 1,000 per trade, which is about 7.5 to 10% of my port per trade. Now let's go over what the overall risk here is and how to manage the risk per trade. So say if I'm sizing with $1,000, right? A tight stop loss is around 5 to 10%. So that means with my stop loss, I'm really only risking 0.5 to 1% of my port per trade while targeting a potential 50 to 75% plus overall gain on a winning trade. I personally usually target a 2 to 3x per trade setup, like a 2 to 3x return per trade setup. But I'm trying to keep things conservative here for this example. Now, with a looser stop loss, I would be around 15 to 25% for that stop loss. With this stop loss, I'm risking 1.5 to 2.5% of my port per trade, targeting a potential 50 to 75% plus overall gain on a winning trade. A 15 to 25% stop loss is pretty common, but I tend to avoid that. Like it's kind of like my worst case scenario because I like to make sure my entry is near my stop loss. And I usually exit once this chart starts to invalidate my setup. It's also important to remember that the fat tail risk of the trade is always $1,000. Like it's important to not forget that because there's always slippage due to emotions or unforeseen risks that you didn't account for. So that's why it's key to make sure you never over leverage on any trade ever. So as you can see here, we are sizing with 10% of our port per trade, which is the fat tail risk. But with our stop loss, we're only risking 0.5 to 2.5% per trade, depending on your risk profile, while leveraging 10% of our port to get a potential 50 to 75% return on that trade. So even though we're sizing with 10%, our stop loss holds us to only a 2.5% max loss on this trade. It can even be a 1%, 2%, 1.5%, depending on your risk profile, but maximum 2.5% makes sense. So like you're risking $1,000, right? But with your stop loss, you're only gonna lose what, about 100 if your stop loss is 10%, 200 if your stop loss is 20%, which $200 in a 10K port is only 2% of that port. And if you make money on that trade, you make 50% to 75% plus of that initial $1,000. So that's a good way to think of good risk management, right? Now for riskier trades, right? I would size around $250 to $500, which is about 2.5% to 5% of the port per trade. That's a small enough size to take the shot. It's big enough to matter, but most importantly, it's not big enough to ever wipe out the port. Stop losses stay the same. Smaller size doesn't mean we're going to start gambling. It just means we're protecting capital and exposing ourselves to that risk without blowing up the account. Now, I'm going to show you guys some quick Monte Carlo simulations to kind of show you how staying disciplined and compounding consistent gains over time using proper risk management is always going to pay off no matter what size your account is. So let's see this one. Let's tap it. So for all these simulations, before I show them, I'll be using the worst case scenario profit targets, which is 50% gain per winning trade. And I'll also be using the worst case scenario drawdown, which should be 25% per losing trade. Now, on top of all that, I will make the win percentage only 55%, which is not the best either. I'm doing this to make things simpler and to kind of account for possible slippage, emotional mistakes, trading slumps, and all those type of things without having to overcomplicate things and make you guys sit through a bunch of boring financial models and simulations. All right, so in this prompt, I'm plugging in here. This prompt includes 3 different financial models that actual institutions use. So just to go over them, just to go over the names briefly, if you guys are interested, I combined the binomial trade and wealth distribution model with the arithmetic versus geometric growth metrics, and lastly, the Kelly criterion fractional model. With those 3 models, we were able to come up with some accurate Monte Carlo simulations. So as you can see here, it's asking me if the variables look correct, right? But for the first example, I'm gonna start the initial capital with 10K. And yes, I am using the latest model of ChatGPT to run this, just because it's faster and it's so smart. I think using AI is one of the best things you can do for trading. You can learn so much from it. So I would highly recommend to use AI to kind of for educational things and to kind of teach you, right? Not to kind of be a genie or something like that. It's very good when you use it correctly. So as you can see here, right, our starting capital is $10,000. We're going to be running the simulation over 100 trades. We are going to be using 10% of our port per trade in the simulation. The win probability is 55%, with 50% gain on winning trades and 25% loss on losing trades. So I told it to run the simulation, right? we're gonna look at the thoughts, right? So you can kind of see like all you can see all these, as you can see here, all the code and formulas being ran for the simulation. But I'm gonna kind of plug in a prompt here to kind of simplify things even more and make it easier to break things down for you guys. I was gonna do this live, but it just took way too long. Like the generating all this stuff just took forever, right? It was kind of awkward, like just sitting there in silence. So I just pre-ran this in the morning one last time. But okay, I plugged in the prompt here to kind of make things a bit simpler. So what we're gonna focus on here, just this is the most important thing, right? If you guys want to read this, I'll give you guys the simulation and stuff. I'll give you so you guys can run it on your own and kind of try to understand everything on this. But we don't need we don't need to be perfect here, right? We just need to focus on the important things. So the total gains after 100 trades using this risk management, this risk reward, right? Which is, remember, this is extremes, right? We're not accounting for like a lot of positive things. I'm using the worst case scenario win probability. I'm using the worst case scenario gains. I'm using the worst case scenario stop loss, right? So we're not accounting for so much positive things, right? I'm really putting this model in like the worst kind of scenario, worst type scenario, right? To kind of account for possible slippage and emotional mistakes and unluckiness, like stuff like that, like slumps, trading slumps. So remember, we're using the worst case scenario of all this too. So that's a key thing to kind of remember. So after 100 trades, the total gains is 46.8K, which is around a 4x, right, of the account. We started off with 10K, and the median, right, the median. So out of 37.5 to 58K, out of all the simulations after 100 trades, uh, the median gain is 46.8K. So this is another important key thing. The risk of blowing up the account, right? Blow up risk is tiny, it's small. It's literally 0.002% given the stated edge and sizing. One loss costs 2.5%, right? As we discussed, of equity. So if you follow and you stay disciplined, right, over time with his worst case scenario setup model here, the risk of blowing up the account is literally 0.002%. Now is the risk management good, right? Yes, conservative and robust, blah blah. Basically, what this is all saying is the odds of blowing up the account using the risk management is 1 in 53K, which is crazy. And the gains over 100 trades with proper risk management is around 4 to 5x of your initial starting capital. Now I know a lot of people probably have smaller ports, right, than 10K maybe. I also ran the simulation here, as you can see, with a 2K port, right? Run defaults, okay. As you can see here, the outcome after 100 trades from 2000, the median gain was 9.37K. The mean was 10K. The chance you finish below, basically blowing up the port, is 0.019%, 1 in 53K. It's really good. Oh, even with the small account, you could still make a huge amount of gains. And remember, this isn't accounting for a lot of things. Like, imagine if you got that UNH trade. You know, it would put you so much far ahead. Imagine if you got like a lot of the big banger trades that have been in this chord, like a lot of the 500%, 600%, because even with even with like losses, right? We're sizing with 10%. So we were only going to use that 10%. But if you hit a banger win, like a 500%, those lucky wins, you're making like four of your full losses, which that whole 10% loss is like worst case scenario. So this is not accounting for those crazy things that we constantly see happening in here. This is all just showing you how proper risk management over time and staying disciplined will pay off without needing to chase home runs and lucky bangers. One of the key things, it's all about surviving in the market and staying disciplined. It's really just compounding gains, surviving in the market, protecting your capital, and staying disciplined. It's kind of like, if you think about it, it's kind of like chess, right? You want to kind of protect your king, right? Some people go all out attack and then they leave their king vulnerable, and then guess what? They lose a game. That's the same thing with trading. When you go for those home runs, you're leaving your and size like and you over leverage, you're leaving your portfolio kind of at risk here. And at the end of the day, if you lose your portfolio, you lose the game. You can't trade. So that's why it's important to always stick to proper risk management because just like in chess, if you go all out attack and you leave your king vulnerable, you lose the game. Um, so any questions here before I go into the next topic? I'm gonna try to keep these questions in 15 minutes. If there isn't any questions, uh, we'll go on to the next topic here. I am looking at the chat now. If you have any questions over what we just went over. If there's no questions, then I'll just go on to the next topic. I'll give it like 2 minutes here. If I don't see any questions, then we'll go into the next topic. Let's see. On the stage, is there a separate chat of C Blast or just to make sure I'm not missing anything? Okay, yeah, I'll be showing that prompt. Okay, just mark your chat. Okay. Okay, there's a stage chat. Okay, let's see. Let's look at that. How do I open that stage chat? I should. Oh, right here. Open chat. Okay. All right. Open up the stage chat so I can see questions now. All right, let's see. How do you set the stop loss? All right, so my stop loss is I base it off technical analysis, right? I base it off the chart. That's how I set my stop loss. We can go over that another time. I mean, there's a lot of strategies, right? It really just find a strategy that kind of works for you. And once you find that strategy, then always set your stop loss always off a technical standpoint. Don't set off like don't set off kind of like just at $100 I lose here. You kind of want to set your stop loss on the based off the chart, right? And that means your entry has to be a good entry. Can you share so that yeah that kind of explains it. If you're still kind of confused, you can just um put it back again. Ask the question. Tell me to break it down a little more. What percentage was stop loss? Okay, yeah, let's go back up to here so you can kind of see the stop losses. So this is the range of stop losses that I think is really good risk management. As you can see here, if you guys can see the screen, right? Correct. Yeah, you guys can see. So as you can see here, we're using a 10K port as an example. Okay, would be great if you can later share the chat GPT or chat or a cleaned up version. Yeah, of course. I'll send you guys the prompt. I'll send the prompt over of what prompt I was using, and you can just use that prompt to kind of and you can adjust the variables, right? You can adjust the numbers to kind of run through more simulations. But honestly, that simulation is kind of like a quick and dirty one. There's a kind of a couple more models you kind of want to run through just to get a more realistic one. But that is pretty good. Like it's really good for a quick and dirty version, right? To kind of put in perspective how being consistent comp like will grow your portfolio over time. And I also use the worst case scenario, stop losses, win probability, profits, etc., to kind of make it a lot more realistic, right? It can easily you can easily get a lot more gain as that, right? Easily. Can you should, um, how many trades will we have to go? Will that go above 50%? Uh, how many trades will we have that go above 50%? Oh man. If you've told me, C Blast, Steel, you can see there's a lot more. we've put man, we it's almost weekly that we hit trades that go over 100% easily, right? So 50% is like I usually don't like I do take profit at 50%, but I usually if my if my full trade ends at 50%, I'm not really that happy. Yeah, they're a lot more often than not. Yeah, a lot more often in this chord, you'll see alerts that go 500, 600, 200. Like there's so much opportunity in this chord, which I just think it's kind of like a mindset shift that you need because the opportunity is here, right? I just think a lot of people just just kind of have to approach things a little different, right? Think more analytically and not so kind of like let's take out the emotion out of trading because the opportunity is here. Remember, I'm using a 50% gain, which we have seen in this chord alerts like people have easily gone over 50% almost daily. Almost daily, there's people banging out amazing trades in it. I have a question. I'm newer to the group. Say VIP alerts with steal position. What's the size of those allocations so I can properly match my size position? All right, so I'll be going over this at the end. I'll be going over how to how to use everything we have learned in this session and apply it to Trade Echo. So I'll be going over that question at the end. But to yeah, so I'll be going over that at the end. On Robinhood, the stop loss hits immediately if it's around 10%, unless you see a big move in the right direction. So our stop loss manual. Um, my stop loss are manual right off entry, right? But say I end up going 10%, 15% like gain. I kind of I start to set a stop line, right? So say I'm already up 10%, 15%. Like I'm profiting that money. I kind of set my stop loss. I don't do it manually anymore. So I only set the manual stop loss like right when I enter because sometimes price will whipsaw or like it'll do some irrational stuff, right? So I kind of right when I enter, I just hold a bit. It's very remember 10% is what I usually aim for. So I still have like another 10% that's still in that risk management kind of that still follows this risk management model and I'm still good, right? So even if I hit 20%, which I like to avoid, right? We're so good. We're still in a good spot. So even aiming for 10%, right? You're kind of protecting yourself and you're kind of protecting yourself, right? Because things can always whipsaw, right? So say if you're aiming for like 20%, you'll oftentimes see that you might end up stocking out a lot of times around 30%, 35% instead of that 20 to 25%. When my stop is around 10%, well, I've been pretty disciplined, but with that 10% stop, sometimes it like slippage, right? Sometimes slippage into so sometimes slippage I'll see myself go 15% to 20%, right? Thank because of that 10% stop that I at least have. So I hope that answered your question. Have you thought of hosting a small account challenge? So if so, how would you go about it? Which index or tickers would you trade? All right, so if I was starting off with a small account, which I did do a 2K account, which I got up to 20K, right? So how would startup do that? Honestly, it's just what has been working for you. I don't think there's one ticker, one index, one this, one that. I think it's really what works for you and what has proven to be successful for you. That is the most important thing, right? Trading is a you versus you style thing, right? It's if you're not using these complex financial models that institutions use, then you have to find an edge that is proven to work for you. And you can do that by following the steps of other successful traders. You can do that uh, by like self-discovery, by going through it, by finding a strategy for yourself, by taking influence from other traders and ultimately coming up with your own strategy. It's always it's just about like finding a strategy that works for you. So I don't think there's one kind of like index or ticker that would kind of throw account for 2K. As you can see, steel has grown the 2K account challenge, the 5K, right? Using earnings, right? His like earnings, he got there by earnings trades, right? Mostly earning trades. Now C Blast on the other hand, he went from 2 to 5K, like in a whole different strategy, in a whole different way. Like C Blast's strategies is a little bit of everything, right? So as you can see here, there's not like one like route to take. It just depends on what works for you. And you can a clear example of that is C Blast's 2K challenge and Steel's 2K challenge, right? They both use two completely different strategies, but they're both at 5K and it both took to the same spot. So I hope that answered your question. So I think you just have to find what works and stick to it. It's very important. Find what works and stick to that. Now, it's annoying to use a stop loss on a ticker while we need to apply that on the option. And it's annoying to use stop loss on a ticker while we need to apply that on the option. Robinhood does not have a conditional trade. I do it based on alerts. Do you have a good way to do this? Okay, wait. It's annoying to use stop loss on ticker to apply that on the option. No. Oh, for Robinhood, you can use a stop limit. Yeah, they have stop limits on Robinhood. They do have I don't know if that was your question. If that's not what you meant, then if you can just just kind of ask it one time. Yeah. So we have 4 more minutes here for questions before I move on to the um next topic here. It's important, guys, to do whatever you need to do to retain this information. I think CLS is recording, but who knows if you'll go back and listen over to this. It's important to kind of do whatever you need to do, to kind of retain this information. Yeah. No, yeah, that yeah, you can't are you saying all right, so if I'm kind of getting your question right, what I do is all my trades are pre-planned, right? So you should kind of have all your trades pre-planned. So I have levels. And what I do on Robinhood is I run the simulated returns at those levels, and then I can I can briefly or it can like it can kind of show me at what levels I will hit this profit, at what levels I will lose this much money, right? And based on those levels, right, on the chart, I'm running simulated returns on the option on Robinhood. So say if like for spike, for example, say at 632, that's one of my levels, right? 632 is one of my levels that I want to like my profit target. So 632 is my profit target on Robinhood. Let me see. Okay. I'll just type in here. All right, so 632 is profit target, right? So 632 is the profit target. I would run and then say the price action is at 630. Spot. All right, so say the 632 is a profit target. Price action is at 630 on SPY, right? I would run a simulated return at 632 and based on that, and then I would run another simulated return at stop loss. So stop loss would be like based on the chart would be like 628. So I would run a simulated return, right? I'll be like, okay, if my stop loss is around 628 and my profit target is around 632, I will run a simulation, right? How much will I gain because on Robinhood you can run simulated returns. That's all corporate. Yeah, so I'd run a simulated return to see my potential gains, and then I run another simulated return to see my potential loss. So that's kind of, and then once I see that, right, I time my entry next near my stop loss, right? So I want to enter around 628, like around like 629, etc., which is not too far off from the price action and stuff like that. And a lot of times, why you do this, we're kind of hitting on another topic here, but institutions, everyone kind of has like if everyone's marking around the same levels, then institutions kind of like fake people out or like drop price lower. So that's why it doesn't hurt because a lot of times the stock is gonna probably go past your stop loss. It won't it won't probably hit your stop loss and then bounce right back up. Like it's not usually what happens. It kind of goes past it, breaks past it. So entering near your stop loss, you should still be good for the trade setup, right? So I would enter near my stop loss. And where I'm going with all this is once so I have these simulated returns, right? I'll enter near my stop loss. Um, and then I'll mark out the level. And then okay, say at this level it's a 10% loss. So now I go to the option based on the simulated return, and then it'll be like, okay, at 10% lower on the contract. I just it's kind of hard to explain without doing it, but if you guys can kind of see what, yeah, no, fire. Um, so yeah, because on simulated returns you can also see like the contract price. There we go. You can also see the contract price. So just simulate the returns, right? And then you'll see the contract price, and then put your stop loss even a bit lower than that expected simulated contract price, right? Even lower, right? Because there's always slippage, and you kind of want to be watching the charts. And if you can't watch the charts, I would say stick to like a 25 to 20%, 20 to 25%. Yeah, decay as well. I would say if you can't watch the charts all time, you kind of want to have a wider stop loss. I think a tight stop loss is good for people who can kind of watch the chart, right? Or if you're going for a breakout trade, remember everything is a if this then that. Nothing is just nothing is gonna be like everything is conditional, right? That's the best way to say it. Everything is conditional, right? You gotta you gotta learn to be fluid and apply different things to different scenarios. So you so it's important to always remember that the market is very if this then that. They're not always a one size fits all. Exactly. So remember, like I can set a 10% stop loss on a breakout trade because if it doesn't break out, then it's probably going to reject and probably going to come down a lot lower, right? But if I'm going for a swing trade, longer day trade, maybe I won't have a 10% stop loss. Maybe I'll go for a 20 to 25% stop loss. So as you can see, you kind of want to apply these rules to different conditions and really do some critical thinking to kind of figure out what you should do in that situation. So I'm gonna here right now. We're gonna be moving on to the next topic, which is avoiding emotional trading, which I see oftentimes be a problem here. Because people might be a rut and you can get a you can get emotional. It's just like trade and I fix and that might tilt you a little bit. Kind of gonna go over how to prevent those things from happening. So I know a lot of you have heard how important trading psychology is. You've probably heard it so much that it almost sounds cliche, but it's true. To me, it's the number two most important thing in trading, right after finding a good setup. The reality is everyone has weaknesses, even me. The key is to make rules for yourself, like I do, that protect you from your own weak spots. Those rules are there to stop you from repeating the same psychological mistakes that cost you money. The market is one place where it will really show you in real time how much your arrogance, pride, or fear costs you. I'm going to give you some strategies that have eliminated most of emotion from my trading, right? So the first strategy is called the script. These strategies are very, very simple, right? I'm not ever trying to overcomplicate anything. I like to keep things simple. So this first strategy is called the script. How this works is you write out your trading process, right? First of all, you have to find a trading process that works for you. That's important. But most people in here have a process that works for them, or are telling people, right? They're just telling people and stuff. So that's also a process, right? Telling people is also a process. You also have to have some strategy in telling people in this course. So you have to write out your trading process in a simple, easy to step-by-step list, either in a doc, notes app, or on paper, anywhere that will give you access to it when you're trading. Now, you want to base this framework on a strategy that has proven to work for you, right? Once it's written, you follow it like a machine. You're not straying away from it. The goal for this strategy is to stop you from thinking and just execute. Just it's gonna stop you from making so much decisions, and you're just gonna execute, right, based on that strategy. And now over time, it'll become muscle memory, and you might not even need the script anymore. You just have it mental notes in your head, and just follow it like a machine, right? So that's the first strategy called the script. The reason for this, it just takes out a lot of like thinking and anxiousness and all these overthinking stuff. You just stick to the script and and if it's based off of a successful framework that has worked for you, then you'll see success long term, right? You don't have to do too much thinking. You just follow the script. Now, the next strategy I think is important is called creating guardrails for yourself. Now, to do this, what you want to do is look at your losses, your rock bottom moments. Think about what got you to that point, what led you there. And a lot of those times, you'll notice a pattern of habits that keep bringing you back to those losses, to that rock bottom, right? A lot of times you've hit like super bad red days, super bad red weeks. You'll oftentimes see it's the same pattern. It's like the same sequence of events, these same triggers, these same things that lead you to that point, right? And whether it's missed move, FOMO, red P&L, boredom, like you'll see these triggers. It's like it's not going to happen for no reason, right? You'll oftentimes see um a same sequence of events that keep leading you to that point of being tilted. Like you'll be on a hot streak, right? You'll be having a bunch of gains, and then all those gains get wiped out in one day because of a FOMO, missed move, whatever you struggle with, right? Because everyone has their weaknesses. Now, these guardrails are meant to stop you from falling into that trap again. Now, once you figure out what those patterns or habits are, you have to make these guardrails, right? Once you do that analysis and once you look deep within yourself and see those problems, you have to make guardrails to kind of stop you from falling into that trap. And you have to stick to those rules, just like the script, no matter what. You stick to those rules, right? Like here's like say let me give you an example of a guardrail, right? So for me, I have two sessions where I usually trade, right? And remember, I'm a fluid person. It's important to be fluid in the market. Everything is kind of situation based, but I have this rule where I trade in two blocks. Okay. Now this prevents me from over trading, and this prevents me from just trading every setup, right? Because I see a bunch of setups and they may look good, but they may not be the best setup. So this makes me only trade the best setups because I've oftentimes fallen short when I just keep trading the whole day and keep looking for trades the whole day. And like, because there's an infinite amount of trades to make, right? It's impossible to catch them all. So I have two trading blocks where there's the most volatility at open and at power hour. There's the most volume and volatility. And in volume and volatility, that's where you can catch a pretty good move. That's why when I trade, it's pretty fast because I'm trading at those times where things move pretty fast. So that's one guardrail, right? But remember, you have to be kind of fluid. So I do take trades sometimes, right? Outside of those trading blocks, if there's a catalyst that just came out, if there is news, if there's this, if there's that, right? Remember, like I said, and the market is really if this, then that, right? It's not always one dimensional. This market is very 3D. So when I'm making these rules, I'm not thinking one dimensional. I'm thinking of all these possible variables, right? Because making those rules can honestly sometimes stop me from making a lot of potential gains. So I then created a separate rule that's saying like if there's a catalyst or if some news drops, then I'll take a trade at outside of those trading blocks, right? That's one example of some guardrails that have helped me maintain discipline over time and stop me from falling in those habits of just over trading. Now, any questions here before I go into the last and final topic here? I'll give it like yeah, so OPEX, yeah, just new rule. I'm not trading on OPEX. It was pretty unfortunate what happened. They were just waiting for me to sell, and the move would happen every time. But um, any questions here before we go into the next topic? If not, we'll go into the last and final topic here. I think it's also very important to remember to always stay fluid. Always stay fluid, right? You want to always stay fluid, have all these frameworks and rules and stuff, but remember to you have to do critical thinking as well. I'm gonna give it like 2 minutes here. If I don't see any questions, then or one more minute. And if I don't see any questions here, I'll just move on to the final topic of that covers how to apply what we learned to trade echo. Okay, when SPX chops or doesn't make the drop like we expected. All right, this is the question. When SPX chops or doesn't make the drop like we expected to, for instance, like OPEX did for multiple trades, yes, the premium's decay. So is there a specific way of knowing when to get out of that trade? Um, it really depends. That question really just depends on the context and scenario, right? Remember the market is very three-dimensional, but it really depends on if there's a catalyst for that move, right? If like your conviction, it really depends on your conviction on that trade. But your conviction has to make sense based on your framework, right? So it really depends on your conviction. But if I'm being honest, you kind of like you said here, when you notice XPX is chopping and when you notice SPX is not making the drop like you expected to, that's when you get out. When you notice those two things usually, that's when you get out. When you it's just better to save that portfolio to protect your capital, man. It's better to protect your king in the chess game, right? You don't win by just going for all out attack. It's important to always protect your capital. Your capital is the king on the chessboard. So once you notice those things, right? Once you notice SPX chopping, and once you notice that it doesn't drop like you expect it to, then that's kind of your signal to get out. Most times, right? Most times, often, um, more often than not, right? Just it doesn't hurt to be safe, and if you get tilted by 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 the move happening after you sell, then that's a guardrail that you have to. That's a rule. That's something you have to work on yourself if you want to be profitable. If you were limited to trading during lower volatility blocks in the middle of the day because of work kids, how would you adjust to your profit target? Okay, that's a perfect question, right? That's a really good question. You guys have been asking amazing questions here. Like you guys have been asking really good questions. I really like the questions you guys are asking. It's been I've been having fun answering these questions. It's been a really good question. So if you're limited to trading during lower volatility blocks like middle of the day because of work, kids, etc., how would you adjust to your profit targets? And remember, it's like I said, it's important to be fluid in this market. This market is three-dimensional. There's always opportunity everywhere, right? Even in those lower volatility blocks, there is still opportunity, right? I bet C Blast can even say a lot of the swing trades kind of they don't pop off right at open. They can pop off middle of the day, right? So I would say there's also always opportunity on SPX middle of the day, right? To kind of say how would you adjust your profit target, it's kind of hard, right? I kind of that you kind of need oh, thank you. It's kind of hard, right, to kind of say like where you should put your profit target. It really depends on your framework, right? Like on your conviction on that trade. Say if you see um or say for this. So say if there's a catalyst, there's a reason, right? There's a big reason besides technical analysis, besides volume. If there's a catalyst for that trade, be a little greedier on your profit target. Now, if there's no catalyst for that trade, if there's no catalyst for that trade, then you kind of want to just have your targets level to level, right? You kind of want to have your profit targets based on that level and trim fast. And make sure you take profits. Make sure you trim if you're trading in those lower volatility times. But if you have work kits, etc., and you can't be on the charts too long, swing trading is a good alternative, right? But also in SPX, you can hop on SPX middle of the day, be in and out in 15 minutes if you catch a good trade, which is my style of trading, right? I hop in, I'm in and out of that trade as fast as I can, right? Sometimes it goes for an hour, which I hate, and I dread being in a trade that long. Um, or sometimes it can be 2 minutes, 3 minutes, right? So it really depends, right? So I think it's trial and error. You have to find, you have to find out middle of the day what are the best setups to take, right? What usually works middle of the day. Remember, everything is kind of like a pattern. Everything is three-dimensional. Sorry, let me get. I need some water here. But yeah, there's a lot of trades that are alerted middle of the day. Hold on. My throat up here. All right, I'm back. So, sorry, I'm drinking so much water. I don't know why my just getting dry mouth. I love to drink. Yeah, so as I was saying, you kind of want to find what works in that middle of the day volatility. So, volume tends to slow down middle of the day, but it doesn't mean opportunity just vanishes, right? There's always going to be opportunity. And sometimes there's better opportunity in the middle of the day than at power hour and then at open. You just have to find, like, I'll give you a perfect example, right? Say Tesla has a catalyst, it has a breakout move at open. Oftentimes, Tesla comes right back down. Uh, it comes right back down, and maybe you notice that after like big names have go on big runs at open. Like, let me reword that better. So say if you notice after Tesla makes a big run at open, it usually comes back during middle of the day for a second entry, and boom, that's that's your edge, and that's how you trade those middle of the day blocks. You just can kind of look for bullish names with catalysts and kind of see if you can get an entry at that middle of the day. And maybe during power hour it blows up, or maybe literally minutes it blows back up. So middle of the day, you'll kind of always catch like reversals or like continuations middle of the day. So you can still there's still money to be made there. But yeah, we have like a couple more minutes here for these questions until I move on to the last topic. But I hope I answered your question. If I didn't, you can just let me know, and then I could break it down a little differently, or I may have misinterpreted it. I love to trade premium. This is a prompt, please. I love to trade premium to discount and discount to premium. Yes. All right, I'm gonna give it like a minute here. If I don't get any questions, we'll move on to the final topic here. Yeah, that simulation just kind of puts things into perspective how over time being disciplined and consistent, protecting your king on the chessboard kind of make bring success over time. You don't need those home runs, and that model is based off worst case scenarios. So imagine if you're getting those lucky home runs here and there, your portfolio is going to grow excessively. Okay, let's see. Apologies. Amanda, no need to apologize here. Let's kind of break down what your question is saying here. Um, all right, this is gonna be the final question here before until for the until and then we'll go on to the next topic. So apologies if you have covered this. Just curious, when you diverse a weekly slash bi-weekly trade, book it, call it a loss. I personally go down the rabbit hole of DCA on some of my high conviction names. Secondly, I personally have these parameters. Your thoughts? All right, let's see. 10% per trade, 5% DCA up or down, 40 to 50% profit and exit, 10 to 20% loss and exit. Index trades, 0 to T, 5% of account max. Account size is mid 5 figures for options. Yep. Those parameters, you can run those. Okay, so all right, let's do the first question, right? Let's focus on the first question. So you personally go down the rabbit hole of dollar cost averaging on some high conviction names. If you're doing options, man, if you're doing options and you're trying to, I would honestly avoid most times averaging down. Always. Like I would not like I don't think it's oftentimes it's not very smart to average down unless there's a catalyst, right? So say if you know a catalyst is coming in, um wait, let me make sure. You're talking about options here, right? Just because you said dollar cost averaging. Okay. So so unless there's a catalyst, right? I think the only time it makes sense to kind of average down is there if there's a catalyst. So say if you're in an Nvidia trade, like you're in an Nvidia trade, right? And you're down around 50, 60. Like your trade shouldn't be getting that low, but say you're down around 50%, right? Because of some emotional slippage and stuff. You're down or your conviction, right? So say you're down 50%, unless I know that Nvidia unless I know a catalyst has come out for Nvidia, like say Nvidia just dropped a new chip or something, right? Then I'm not dollar cost averaging just because it's so risky, right? Then you'll get into the hole. And if you basically you're averaging in, basically averaging into that trade, you're just putting that money into a losing trade. The best thing to kind of do is like try to avoid getting to that point first of all. Like avoid getting to those big drawdowns. Just cut that trade and just look for a reentry. I think that's the safest bet, right? You will kind of want to instead of averaging back in, you kind of just want to cut that trade, and then you have enough capital, right? You have a 5 figure for options, which is good. It's you can make money with that. So I would avoid, right? I would avoid averaging in. I would just cut the trade and then look for a reentry with a bigger size potentially, right? Because then you can, and also you may be right, right? You may average in and you may be right, but their timing may be wrong. But there will be no buying power. I mean, if he's following those parameters that he said, like those parameters that he has now, then he should have buying power, right? Because remember, we're not going all in on every trade. He's putting in 10% of his port per trade. So he should, based on the parameters, he should have some buying power. And um, even if he doesn't have the buying power, it's still good risk management to just cut that trade and then maybe come back in tomorrow and stuff, right? And another thing I wanna highlight, right, about averaging in. Another thing I want to highlight about averaging in is you may be right, right? About okay, it hit this level, we may go up now, right? But it doesn't mean your timing is going to be right. And remember, data is against you on those contracts. The best thing to do is just cut that contract and just find a better contract with better data, right? And then just size in maybe with a heavier size. And then you could time that entry a lot better than just hoping for it to happen before data like kills your premiums on that contract. So it's a good thing to kind of cut that trade, right? And then you can always just wait for the reentry. That reentry might be a couple of days from now, 5 minutes from now, even a week from now, right? And you would have been holding that drawdown on those premiums, which by that time your contracts would be worth a lot less. So it's a lot safer. Like because we want to think generally, right? We don't want to focus on anomalies. Yeah, there's gonna be anomalies here and there, right? There's gonna be anomalies where it happens like it hits your trade draws down 50% and then out of nowhere it's up 100%, right? There's gonna be those anomalies, but we're not gonna focus on that. Generally, when a trade is down 50%, it's good. It's best to just cut that trade. And if your conviction was right, that move usually happens maybe like a couple hours to like a day later, which still gives you time to re-enter on that trade without having to risk and hope that it comes up in time before your premium starts to just die by theta. So I hope I was able to cover that question. I hope I was able to understand that question. And then for your parameters, I'm gonna drop the simulation below. I mean, you can also use. I'll drop the simulation, but that one's kind of like a kind of rough cut of the simulation I usually use. I'll drop the simulation. I mean, it's pretty simple. Honestly, it's not a bad simulation. I'll drop that simulation, and then you want to kind of use the worst case scenario numbers to kind of get like a rough estimate of your projected gains following that risk management, those risk management parameters. So I'm gonna go on to the last and final topic here. Before I do that, let me just see this. So for the last section, I will be going over I'll be going over how to take advantage of the opportunities that TradeEcho provides. Let's see. Okay, I can see we're all good here. Turning opportunities into wins, TradeEcho. All right, I want to show you guys how to possibly implement what we have learned in this session to TradeEcho. I'll be going over two different ways to approach the opportunities in TradeEcho and some errors to avoid. Now, I'm going to be giving two different scenarios here for this first example, right? This first, this first, this first example is how I would go about telling the traders in TradeEcho, right? And I'm going to be giving two different scenarios here. The first scenario is if I was someone who couldn't look at the charts all day, which is a lot of people, right? People have jobs, people have kids, people have this, people have all these different variables for why they can't look at the charts all day. These are the things that I would do. I would find and stick to one to two, maybe three profitable traders and tail them, right? I would follow almost every trade that I can follow because remember, every trader has wins and losses. And if I'm just following every single alert, then I might catch every single loss on those alerts because I'm telling all these different traders, right? And if you kind of we can even run it, you can even run a simulation on that, right? Different strategies. There's different like probabilities, like numbers and stuff like that. So if you're telling a bunch of different alerts from a bunch of different traders, there's a good chance that you catch all their losers, right? But if you're telling one to two profitable traders and you're telling all their trades, then there's unless those traders aren't profitable, there's a high chance that you don't catch, then that you actually become profitable off those trades, right? So I would find and stick to 1 to 2, maybe 3 profitable traders and tell them. I would then study their winning trades and losing trades and create a system where I come out and based on like what I've like the analysis I've done on those traders, I would create a system where I come out catching most of their winners and avoiding their losers, right? Because you can kind of see like, be like, oh, this trader isn't really good at trading, um, at this time or trading like these type of setups, or he hasn't had success doing these type of things, right? You'll notice that, you'll see that, and then you'll notice stay away from that. But then you'll be like, oh, this trader, for example, is really good at crypto. Like he really knows his crypto. So I'm gonna tell his crypto miner trade, right? So you kind of do those. There's a strategy to also tailing traders, right? That you can look at to, and also if you perfect this strategy, you can catch almost everybody's winners. Realistically, I mean, it will take time and stuff like that, but you can it like if you master like the analysis of these traders, of these profitable traders, and just somehow are able to catch almost all their winning trades, man, your account would grow. Like it would be a huge, huge gain. Now, how I would study these traders, I'll do that whether verifying the how I would like how I would choose. Let's say how I would choose to take these alerts, right? I would do that by like verifying the chart setups real quick, right? If I was someone who couldn't be on the charts all day, I would look at TradingView on my phone, verify the chart setups. I would verify if I agree with their analysis, or I was try to figure out where they usually succeed and where they have fallen short. And I'll stick to telling the type of trades which have proven to be successful for them. So yeah, like I said, mastering this is basically like free money. When you buy, they buy. When they buy, you buy. When they sell, you sell. And you reap the rewards while not having to do much of any work, just having to make the right decisions and stick to your stop losses and profit targets. Right. So that's one way to kind of approach telling traders in Trade Echo. And also, um, yeah. So if I was someone who couldn't look at the charts all day, that's how I would approach these things. Like I would stick to 1 to 2 traders. It doesn't really make sense to just tell all these people's random people's alerts and the trades or all these trades because I'm gonna be honest, there's a high probability like doing that, there's a high probability that you can catch a lot of losers. But there's also a good probability, not, I don't even say that's that high, but there's a good chance that you may catch everyone's winners, right? But I think the losers are more likely, and it's what I tend to see in this court is people just not like trying to tail all these different alerts, right? And they end up catching one person's loss, and then that person ends up on his next trade hitting for 200, 300%. And they're like, damn, I caught the loser, but I didn't catch the winner. And that's because they're not telling all this person's trades. Like everyone's going to have losing trades and winning trades. So I think that's kind of a mistake that I see going on here. Now, if I was someone who was an active trader, right? If I was someone who's, or if I was even someone who's able, like if I'm at a desk job or I'm at work or I'm at a place where I could be checking the charts a little more or be more active, I would also do all of the above, right? But more. I wouldn't have to stick to 1 to 2 traders. I can just keep an eye out on the alerts or any interesting trades that I like. Now, if I see an alert that I like, I would verify the setup by checking these 3 things. Does it have a catalyst? Do I agree with the analysis? Is the chart setup good? Now, if it checks any of those boxes or all 3, I size accordingly and set my own stop loss and take profits, unless I trust that trader, right? I will never follow any trade blindly without having any of my own conviction. It just doesn't make sense. Like if I'm an active trader, I can check the charts. Like it doesn't make sense to do that. Now, an issue that I see going on in Trade Echo a lot of times with people is sizing and stop losses, right? And profit taking. All right, yeah. Okay, there we go. I don't know why it doesn't have here, but this is the final problem that I see going on in trade echo is people are having issues with sizing, stop losses, and profit taking. This is where I see a lot of people falling short. If you paid attention to everything we have covered today, this shouldn't be an issue anymore. It's pretty simple. It's really simple, actually. I would follow my risk management strategy and my script. There's no need to overcomplicate anything. As you can see, when we run the simulations, like when we ran these simulations, um, as long as you stay consistent, you'll win over time. So it's very simple. Just stick to your risk management principles and your strategy. Like if they're sizing in, if they're say someone has a really high conviction trade, right? And you see that alert and they say I have high conviction in this trade that I'm making, and you want to tail, or you size with 10% of your portfolio. You still size with 10%. Like you still size with 10% no matter what. Now if they say nothing, right? They just alert the trade, then maybe you side with 700, like 750%, 7.5% of your portfolio, right? Or maybe 1,000, right? It depends on on how you feel. If you also like that setup. Now, if they're saying this is a lotto, or if they're saying like not a really risky trade, then you size with 5%, 2.5% of your port. Like you have to stick to your risk management principles. And the way we have set this up, it should align with every trade that every trader makes in this Discord. It should align. Like you don't like it doesn't matter if they size $100,000 on that trade. Your portfolio is a lot different than their portfolio. $100,000 for them could be a blip in their portfolio, and to you can be a big amount. So it's not important to think like, oh, he's putting 100,000 on this trade. I'm gonna put 20,000, like my whole portfolio on this trade. That's not a smart way to look at it. You want to um, stick to your risk management strategy as much as possible. And remember, you can tweak this, right? If you can tweak this if you want, you could change things up. Yes, whatever works for you, right? But it's important to have a strategy in place and have a script and have guardrails and have all these things that we have gone over today to be successful, right? Because we're not here to lose money. If you wanted to lose money, you go sports betting or you go gamble. You go do those things, right? And remember, we're doing naked call options and and put options most of the time, which is a lot riskier. So imagine you're doing all that, right? You're not following a financial model and these financial strategies, and you're still doing all that without even a risk management strategy. It's you're not really setting yourself up for success here. So for the people who struggle with sizing and stop losses and profit taking, just align those people's trades that you're telling with your port management and strategy and your risk management strategy. Like said here, like 1,000, 10% to 7.5%, 5% to 2.5% on riskier trades. Like we have it all here, right? So for sizing and stuff like that, you should never be full porting. Never, ever, ever be full porting. You should never, you should really, really, really never stray away from your risk management and portfolio management strategy ever. Because as you can see in the simulations that we ran, over time, being disciplined and strict pays off in the long run. Um, Now, before we go into the final questions here, I want to see if C Blast wants to come in here and uh, I want to see if C Blast wants to come in here and maybe if he has anything to add on or anything he wanted to say regarding this topic of how to go about how to take advantage of the opportunities in Trade Echo. But I don't know if he's here or not. But let's.
Okay, yeah, I'm here. So going on the app for Trade Echo, I do see just a couple points. Like with the Algo Edge, we were talking a lot previously about like the NDX sniper strategy. Those trades, you can't just jump in on like just because there's an order, like $1 million order in NDX, don't just jump in. That's the big thing. Make sure you're following like the strategy, kind of what Darkhorse was talking about. He has his guide rails, his strategy where he takes entry. Like I have my GZ strategy, like the BT Cloud Flip. Always make sure you're using your strategy with the algo edge or options flow. Like you want to have some confirmation there. Don't just blindly follow one of the alerts unless you're getting like some, you see a good setup and it follows your strategy as well.
Yeah, I could hear the echo, man. My man's living good out there.
Okay, yep, I'm on the Mac here. Like, let's see, the MacBook. I'll let you talk here because let me see if I can find a
Yeah.
mic. 'Cause
No, you're all good. I was just you're all good. It's I was just because I just wanted to see if you had anything you wanted to touch that I didn't touch, or if you wanted to bring up anything possibly. And what you brought up was a really good point. I do also see that happening. So yeah, I think we're gonna start closing it off here, right? So now with all this being said and everything I have covered in this session, I hope I was able to help some of you guys and that I did a good job at making things easy to digest and to understand. This session is recorded, but I do hope some of you guys took notes. And if you guys have any further questions, we can run one last Q&A here for these last 15 minutes. I don't want to hold you guys up much longer and this morning, and I want you guys to go on and enjoy your day. But I hope I did a good job, and I hope I was pretty concise and not overcomplicating things. Because, like I said, I think oftentimes like you're not a smart person because you can make things sound complex, right? You're not a smart person because you can say all these big fancy words, right? I think oftentimes the really smart people make complicated things seem simple, and they simplify the most complicated things to make it digestible and understandable. So that was my goal, to try to kind of make things easy to understand and not overuse all these complex words and try to sound super smart. I just want things to be easy to understand, concise, and just get like yeah, that's basically it. So I hope I was able to break these down things down pretty good, and that you this was able to help you guys. Most importantly, I hope this was able to help any of you guys, right? Kind of shift your perspective on things. So that's the main thing here. That's like literally the number one thing. I hope this was valuable to you guys. So we'll do yeah. Yeah. I appreciate you all you guys as well. I'm glad you guys enjoyed it. Now these last 15 minutes here, I will be doing one last Q&A. If there's anything you guys had questions on, anything you guys want to know, um, drop it here. And if there's any like information or any charts or any like prompts that you guys want from me, just put it in Market Talk and at me. Will there be future sessions on things like your specific strategy? I think C Blast brought up to me that maybe once a month. Oh yeah, that's the guy Steel, man, the goat. That's the goat Steel right there. That's the goat right there, Steel, with his crazy banger. His crazy banger last week. That was a crazy banger. If you catch one of his bangers, man, you don't have to worry about risk management for a while. Would you like to trade? I personally like to trade SPX just because it's easier to manage with my risk management profile. It's like based on my risk management, like because I have a tight stop, 10% to like 15%. It's kind of hard to follow that on NDX because the spreads are so wide. Yeah, and also it's yeah for alerts too. It's small account friendly, and then also you don't have to go too far out the money, so data isn't drilling you. I think on NDX a lot of times like if the move lags a little bit, you're gonna get drilled by theta every day or weekly. I take SPX 0 DT. That's how I trade. I usually only do 1 DT 0 DTs. I do weekly sometimes on single tickers, but on the education setup, looking at the GZ setup, values for the Fibonacci. You There's some good YouTube videos on that. If Cblast isn't able to talk here, there is some good YouTube video things. So, like, can you also share your legend setup and what indicators do you check before entering a trade? Yeah, of course. I can go over that briefly. I used to trade IWM, but SPX has shown to be successful for me. So like I kind of like go over what has worked for me and I just stick to it. I just stick to it, right? Like if I notice I'm not very good at, let's say, leaps and stuff for whatever reason, like I don't have diamond hands and stuff, I don't trade it, right? If I notice that I'm very good at SPX 0 DTE and it's shown to be very successful, then I stick to that and I master it, right? So that's kind of I just kind of find things that second shot here. Yeah, for the GZ, if C Blast isn't here, I think there's a lot of YouTube videos that you can look up to kind of go over how to set up your GZ, and they're pretty good. You just have to find you just have to find the right ones. But there is um some YouTube videos that go up how to set up the values for your Fibonacci. If C Blast isn't here currently to answer that, because I don't I use levels, right? So I didn't go over chart analysis and my trading strategy, etc. Because I think the opportunities to tail people are here, right? The opportunities to tail, and I think the opportunities are here, right? And there's a lot of education about trading and all these different strategies. I think a big thing that would probably help use. Can you write the tools you use in trading? Yeah, of course. Let me drop a screenshot here of my my drop a screenshot here of my where is it at? Of the indicators I use. Oh, this is F12. This is not print screen. Okay, there you go. Yeah, of course. Yeah. Oh, that I just want to say. All right, let me go back up to the. I do want to say that that doc was just like something to have to. It wasn't really like very detailed. It wasn't the best. I kind of wanted you guys to focus on what I was saying, but I will drop the doc, of course. I'll drop it in. Let's see, where can I drop this so you guys can kind of see? I will drop this in not watch list. I'll drop it in trade analysis. So if you guys go to the trade analysis, you'll see that I also dropped the prompt. Those are my favorite indicators. For Robinhood Legend, all I use is the volume. So let me see. That I think I posted the Robinhood Legend indicator. For Robinhood Legend, all I use is volume. I like to keep that chart kind of clean. Let's see. So I do use TradingView though, because the indicators on TradingView are really good, the ones I use. So for Robinhood, I like to keep my chart just like that, just pretty simple. Let's see, hold on, I can't look at the chart right now because I'm dropping things in. Uh, go back to, I go back to the, oh gosh. Let's see, how do I go back to, I can't go back to the chat here. Oh, there we go. Yeah, Robinhood Legend is amazing. So any more, we have couple more minutes here. Yeah, Robinhood Legend, especially on IPOs. Oh, I would highly recommend to use Robinhood Legend on IPOs. Like if you're trying to catch an IPO, Robinhood Legend is the way to go. 100%. It's just so quick. You can sell and buy so fast on Robinhood Legend. Like and your fills are instant, almost instant. It's like you're trading on TradingView basically. I can't wait till they add like you can trade options on there like using the chart. That would be crazy. So yeah, for Robinhood, I like to keep it clean, right? Yeah, that's a good setup. What I would also say, Speedster is, I know on Robinhood you can kind of have multiple screens open. You can make like new tabs too, like different tabs. Um, C Blast is recording it, so I think he will be dropping it in the Discord. So he is recording it. So after this session's over, I think he'll drop it. Yeah, no problem, man. I would also say Speedster, you kind of want to make another tab that kind of looks a little cleaner, just to kind of give you a better perspective on the chart, just to give you like a cleaner perspective of the market structure, right? Because those are really good to find setups, but kind of when you're in the trade, uh, you kind of just want to look at the current market structure and the candles. So I'll say maybe make another tab that it's a with literally with only volume indicators probably, just so you can look at it a bit, have a better, cleaner look on it. So, but also another thing I want to say, on that simulation, it said you can get 4 to 5x on a port. I'm only up one, like like two x, I guess. So yeah, as you can see, even I oftentimes struggle with the rules, but more than less, staying disciplined and consistent has got me here. So yeah, for real. Buy the dips. Trump just said buy the dips. Oh, that's gonna. Oh, Eric Trump said buy the dips. I don't know what that means. I don't really know what to do with all these tweets anymore. We have a couple more minutes here. Yeah, a lot of people. It's all about just being, just sticking to your strategy, man. It's. Oh, let me drop the doc here. Actually, sure. All right, I'm gonna drop the doc and the prompt in the trade analysis. Let me see. Trade analysis. Upload file. Hold on, let me make sure that's the right file. I leak something. Hope it is. Whatever. Microsoft Word live session. And that is not the right doc, thank God. All right, let's see. Where's the? I can just click here actually. Can I click share? I'll just download it from here. All right, let's see. And then um, you're gonna drop the prompt here or the. All right, there we go. I dropped all the information. If there's any other information you guys wanted to see, let me know. I dropped almost everything that we went over. Yes, exactly. No, but also we don't want to say no home runs too. We want to hit those home runs, but with proper risk management, we are. If you're catching a lot of successful trades, there's a high probability, and if you're staying consistent, there's a high probability you do hit also home runs, right? But you're not targeting for them. That's why you have runners and you have all these stuff, etc., to hit those home runs. Yeah, no, yeah, no aiming for exactly, no aiming for home runs by full porting, exactly. Yeah, often like you could be on a you can you could be like it could happen to where you're like, oh, I'm a full port this trade, and then you don't full port it, right? And you're like, never mind, I'm be responsible and I'm a size responsibly, and then that trade goes crazy, right? So you're like on the next trade, and then you go on a bad streak, right? You're like, okay, now I'm gonna finally I have nothing to lose. I'm gonna finally full port, and then you wipe out your whole port on that last trade. That I've seen that happen time and time again. It's always through people just not thinking straight, just not following their script and their rules. I've even went through that a couple times, man. My biggest problem and something I still struggle with is like when I'm right about a trade, but I get stopped out and then it goes like without me. You know that's still my one of my troubles is that kind of still tilts me a bit, right, when that happens. Because I'm not angry when I stop out and I was wrong, right? It makes sense. But when I get stopped out and then the trade happens without me, that's something I need to work on. Need to set up a guardrail for that. So we have about a minute here. We're gonna close things up here. One last round if anyone has questions before I end the session here. I hope you guys enjoyed it. I hope it helped you guys, and I hope it was easy to. I made it easy to kind of understand the concepts and strategies here. What trades for tomorrow? I no, I still have to. I still have to get prepped up for tomorrow. Probably do it tonight. Still need to do some market prep for tomorrow. No, no problem. Um, Iminzua. I think it's Iminzua, right? I hope I'm saying that all right. No problem, man. I'm glad you enjoyed. I'm glad it was useful for you guys. As this is my first lesson on here, I hope I did good. Uh, that's my biggest thing. All right, that's gonna at 8:40 here. Gonna call it. I appreciate all you guys for showing out, man, for coming through and stuff. And I'm glad you guys enjoyed it. At 8:40, I will be ending it here. Thank you all for everything for showing out, man. I wouldn't be on this session right now if you guys weren't interested. So also huge thanks to you guys for coming out. Yeah, you guys have a great yeah. Let's go. Oh yeah, you guys have a great rest of your day. I did it early, so now you guys can go and enjoy your guys' day, man. Go get crazy, get ready, cause tomorrow's time to lock in. No problem. All right, you guys have a good one.